Oh boy, here we go again. Back to work tonight. First day of spring, March 21st, 2022. My name is Joseph, and as always, welcome back. Hope you guys enjoyed your weekend. Welcome back to our nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Tuesday's trading session. I got a fantastic video in store for you guys. Lots of great trades setting up for tomorrow. Got the S&P, got the Nasdaq, and we got the crude oil ready for Tuesday's trading session. I'm going to cover all my favorite trades in tonight's video to make sure you end the day tomorrow in the green. And we'll also talk about some stuff to avoid tomorrow because, as always, we got a bunch of ranges on the charts right now. We got a bunch of traps you can see on these charts. I want to make sure you avoid those traps and capitalize on those traps, whether you're trading on your own or whether you're trading with us tomorrow in our trade room. Like I mentioned, a lot to cover here tonight in this video. Got a bunch of ranges on the chart. Get a nice strong kind of melt up here right now on the oil with all the stuff happening in Ukraine. We're going to cover all my favorite trades in tonight's video. Don't you worry. Before we jump in, though, and get our hands dirty on these charts, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas right on this YouTube channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit that little bell icon so you always get notified every time we publish something new, because I do update these things every evening. And don't forget, if you guys have any questions, drop those questions in the comment section. I do personally answer all the questions myself, so don't be shy about asking questions in the comment section below. And if you guys enjoy the video, if you tune in every evening, if you enjoy this video lesson as much as I enjoy making it, hit that like button for me. Appreciate you guys tuning in, subscribing, hitting that like button, and supporting this YouTube channel. But enough of the intro, though, right? Let's get this party going here. How are we gonna make our money? Where's the easy money here? Where's the big money, the easy money gonna be here on Tuesday's trading session? Well, got a lot to cover here tonight. Got a bunch of ranges, right? Range on the Emini, range on the Nasdaq. We got some ranges on the oil, but oil has a little bit of a different plan of attack going on right now because of the situation happening in Ukraine. So I'll tell you, range-bound markets. We're gonna cover some really fun trades for the S&P and the Nasdaq here tonight, and then on the oil, the number two. The number two is going to be your favorite number for oil tomorrow. We'll talk about why the number 2 is so important here on crude oil. But range-bound markets right now on the E-mini and the Nasdaq. I love ranges. They're very easy to trade. We'll cover all the bases here tonight, all the trades for the E-mini and the Nasdaq tonight, and of course we'll cover why the number 2 is so important here on the crude oil for tomorrow. Now, speaking of tomorrow, though, let's make sure we all get on the same page here. There isn't any major news tomorrow, but obviously right now it feels like there's this kind of buildup right now about what's going to happen next in Ukraine, what's going to happen next with Russia. We heard a lot from China and NATO last week about would they support the efforts on both sides of the kind of the line right now, and so we're kind of all waiting to see if that's going to come into fruition. That is definitely something that is definitely weighing on our markets here, and that's something that unfortunately I don't really know enough about tonight, but we'll definitely be keeping our eyes and ears open for more updates, kind of unscheduled updates coming out tomorrow. And we heard from Powell today, right? Inflation, the Fed is something that we're definitely dealing with right now, right? The Fed, we heard from Powell today. I'll tell you, Powell was really he was pretty specific today. He made it very clear, and it was almost funny to listen to the guy because it was like all of a sudden the Feds come out and said, "Oh shoot, we missed it on inflation. We have to now really ratchet up these rate hikes." Just a few weeks ago, they were like, "No, this is transitory," but now you can definitely tell the Fed is like, "Oh crap, we've kind of backed ourselves in a corner here," and so they've made some. Powell talked today, Bostic talked today, so they made some pretty bold statements talking about 4 to 6 rate hikes this year alone, and so that is definitely, even though even though we don't hear from Powell again until Wednesday, as you can imagine, remember, we get Williams tomorrow. That is definitely something that everyone is kind of obsessing about right now. Will there be, we may wake up the next week or so. We may wake up sometime this week or next week, and they may pop in a surprise rate hike, which doesn't happen very often, but I've been around the markets almost 15 years. I've seen a couple surprise rate hikes, so we definitely have to kind of keep that in mind. There's a lot of these little grenades that may go off. Pardon the metaphor with the war going on in Ukraine right now. But there definitely are some things that were they're lingering out there. Ukraine and inflation, the Fed being one of them. So even though there isn't any major news tomorrow, we definitely are going to be keeping our eyes and ears open for any news headlines that may kind of blow up these markets here. Not literally, obviously, may give us some pretty good trading opportunities. And then, of course, don't forget, make sure you come back tomorrow night, because tomorrow night we'll talk about, because Wednesday's a big day now, right? Thursday's a big day. And be aware, too, I mentioned this last week. I won't be in the office on Wednesday and Thursday and Friday afternoons for the rest of the week here. I do try to take some time off this time of the year, the end of the first quarter. I usually take it off last week, but just be aware that there'll be no newsletter on Wednesday and Thursday evenings here this week. I'm pretty consistent with the videos every evening, but I do, like anything else, take some time off to avoid burnout and just to make sure I kind of get refreshed, refocused, and ready to go. So we'll go back to our normal schedule for next week. So be aware, tomorrow night's video newsletter will be the last one here for the week here on this YouTube channel. I'll be off Wednesday, Thursday, and of course we don't do the newsletter right on Friday. If you're a student of mine, right, we'll obviously keep the routine going as normal, right? But just be aware of that change here throughout the rest of the week this week. So tomorrow night, final newsletter tomorrow night. Be off on Wednesday, Thursday, and Friday afternoons on the video newsletter. I hate to leave you guys hanging. If you want more real-time updates, definitely join as a student, join as a member, and I'll see you in the trade room, and we'll do it all together. Let's get back to our charts, though, that we can know, right, what the schedule looks like here for tomorrow. So a couple really big known unknowns here. Back to our charts right now. I've got three of them, right? S&P, Nasdaq, and crude oil. I'm going to go over each one of these charts one by one. Now, there may be some similarities. What I'm going to do is, though, I'm going to keep it spicy here on this video. There will be money-making setups, money-making opportunities, and different learning opportunities across the entire video here tonight, right? So I'm not going to spend all my best stuff on the first one, right? So if you're serious about your trading, if you want to really maximize your returns tomorrow, make sure you watch the entire video all the way through, because I will be mentioning different setups, different pattern trades, different ways to apply this as we go deeper into this video, right? So make sure you get a comfortable spot, and let's dive right in. How about the S&P right now? What's the most important factor we have on the E-mini S&P? Well, we're basically bullish from last week into a trading range, right? It's a pretty obvious trading range, and right now we have the buyers who are trying to rotate, and they're basically trying to retest some of these highs up here, right? The buyers are trying to, we basically have that trading range. The buyers pretty much spent the day buying the dips. They were unable to get much going through those highs, right? Powell put a bit of a damper on that this afternoon, but it's pretty obvious, right? The buyers are pretty committed here to buying the dips up right now, and they're hoping this thing will push through and make a potential run all the way to that 4,500. And there's a wide open space up there until we see 4,575 for the most part. So again, buyers have momentum right now. The buyers are trying to retest these highs just because, of course, ranges love to rotate, right? We rotate back and forth. So we rotate down, and now those buyers are trying to, right, break out as we go here. Where do we think the best trades are going to be here for tomorrow? Well, I'll tell you right now, as this market goes higher, there will definitely be ways for the sellers to come in and short off these highs. That is one thing I'm looking forward to tomorrow. I would love to grab a short, a little reversal off of that high. Now, the buyers were unable to hold that pullback. They couldn't hold that pullback. But if the buyers are able to get this thing going, we definitely have some breakout possibilities here tonight. I'm going to talk about 4 different breakout patterns, not all on the S&P. Like I said, we'll break it up over the charts throughout the video here tonight. But there are a handful of breakout patterns that we'll talk about there. As the market goes lower, right? If the market was to run lower, I can definitely see ways to short this thing as it goes lower. I can think of even more ways here now to buy it off of that low, right? So, we got some ways to short on the way down. We could buy it off that low as well, because again, you've got this range up overhead. So there's plenty of trades here for tomorrow, plenty of ways to make money. How about we go higher here right now, right? Remember, as a professional trader, we're not in the prediction business, right? We are in the reaction business. So we want to plan our trades ahead of time and then trade our plan. That is the goal of this exercise. As we go higher here right now, how would I sell off the highs here? How would I sell off these highs? Well, we're in a great location to sell short, but momentum is pretty bullish right now. And so when momentum is bullish and I want to be a seller at a resistance level above the top of that trading range, what I'd love to do is I love to use what we call a two-try failure. And that is buyers trying once, buyers trying twice. Right? You'll notice we see a lot of that. We go up, the buyers once, the buyers twice, and then when they fail, we can sell right into those stop losses. So as the market pulls back here, again, run into major resistance, buyers once, buyers twice. Think about where those stops are. Right? Think about where the pain would be. Think about where those buyers get caught on the wrong side of the market and then looking to short this sucker right back down into that trading range. Now, your job isn't done yet at that point, right? We get that nice, what we call a two-try failure off of that high. Your job is not done at this point now, because now the amount we go above the range is usually the amount we go below the range. And so now we get a good idea of where the market wants to go from there. And now what I can do is I can mark up a new trend line off that low. I can find a new channel off of that high. And one of my favorite trades is that first pullback, right? That first pullback. Now, my favorite entry on that is a trap, right? A little trap high there above that high, right? Look over here, right? So we go up, right? Bull move up, 1, 2, we drop back in. Now look what happens. Mark that low, mark that high, right? And see that first pullback? It's a money trade right there. So two-try failure into that first test. Now guys, when I say first test, right? When I say first test over here, this could be any of the entry patterns that we talk about in the free trading course, right? Could be traps, could be failures, okay? I know a lot of you guys have already taken that free trading course, but if you're here for the first time right now, if you haven't learned all the setups, if you haven't learned when to take them, when to skip them, what I'll do is I'll put a little link up here for you in the upper right-hand corner. That's for our free trading course. I call it the Quick Start course. And I'll tell you, if you're tired of missing the best trades each day, or you're sick of taking too many losses like I did when I was a new trader, that free trading course is a perfect roadmap to follow for anyone trying to earn income in these markets. You'll learn all my favorite setups, but more importantly, I provide a ton of examples of how we apply them, so you know kind of what they'll look like, and you can begin trading them on your own. So that way, the next time I say up 1, 2 try failure into first test is the best test, right? You'll kind of know what I'm talking about, right, when I say that failure into that pullback as we're going. Now, if we go higher here, how could I try to break out? What would a couple breakouts look like? Let's talk about one of those breakouts on the S&P. And then again, I'm going to cover some more breakouts as we go later on in this video. So what is one thing that wasn't able to happen as we went higher? We weren't able to get up and hold the pullback and go, right? Get up, hold the pullback and go, right? It's basically 0 for 3, right, on those breakouts. So again, if we can get up into this area, I'm looking for those buyers to try a couple times and sell back down right into that trading range, as I mentioned before. But if the buyers are able now to pull back and hold that pullback and jump, right? That's the key. That's the word you want to remember, jump, right? It needs to really jump off that moving average. When it jumps off that moving average, that basically rips this range apart. And it basically creates enough velocity going higher to allow us now to be confident when we buy this first pullback, right? Now, again, as I mentioned earlier, this could be a trap setup, a failure setup. One of my favorite entries, again, we go up, we pull back, we blast right through that high. One of my favorite entries here on this, mark up that high, mark up that low. I like to look for, again, those little traps, right? Get underneath the prior swing, get underneath the moving average, grab that trap, trap in those bears, trying to sell right back into that range, hit them with a failure, buying into stops, and then buying that pullback, right? We see a lot of these in the trade room. Trap setup, failure setup, pullback combination, trap, failure, pullback. And then where would the target be on this, right? Where's the target going to be on this? Well, what you want to remember is the first leg is almost always equal to that third leg, okay? Don't use the middle leg as the measuring leg. Okay, right? So if we get this thing to go up, pull back, and go, the size of that first leg is going to be anchored off the deepest part of that pullback, and that becomes the next big objective as we go. All right, you'll see a lot of examples of that in that free trading course I mentioned earlier. And again, we'll cover it in more detail tomorrow, the trade room. We know there's a big round number up there at 4,500. And then really, if the Bulls get a little, if they really get their fantasy tomorrow, right, that 45.75, but that would be a very, very big stretch, right? Well, not unheard of, right? It'd be about what? About a 100-point move. So, definitely not impossible, but a pretty big move here, right? That 45.75, where they're really to go here. I've got a few more of these breakouts, right? So we'll talk more about breakouts as we go here. What if we end up going lower here? All right, what if we go lower? Because in all reality, you could maybe look at this and go, hey, wait a second. Isn't this a big channel, right? Couldn't we just keep going lower here? Isn't that a strong move down? Didn't you say that every time there's a strong move, there's a good chance there? Yes, absolutely. So what if we go lower here? What will be some ways to do it? I think as the market goes lower, I think a really good option here would be, let's say it kind of grinds down, right, overnight here. Draw that channel right off that low, bring it right up around that high, and look for a trap entry right off that high, right? Little trap entry off that high. Where do they want to go? They want to go back to retest that low, right? So if I can get this thing to kind of pop down, kind of grind down like this, right? Anytime we see a pop and grind, right? We'd like to draw that trend line down off that low and then hit it right off of that high, right? Make it a trap setup, make it a failure setup, a little pullback combo. You'll see a lot of examples of that in that free trading course. And then, boy, don't be surprised here. Don't be surprised if we find our way all the way back to that low. And then now, again, because this is basically one big range up here, right? Don't be surprised here if we see something like this now, right? Where they go all the way down, okay? Now, remember, this will be a very big move down at that point, okay? So you're going to be careful with what? Momentum. So see what happened here? So they came back, they tried once, they tried twice, right? So everybody bought that second try. That's exactly what we're looking for over here, okay? So as we go lower here now, we wait for the bears trying once, trying twice. Think about where those stops are, right? And we're buying into those stop losses. So we know where they want to get to. If we can now rope in those bears, let them try a few times, we can pop it right back up into that trading range. And then what if it holds and keeps on going lower? How do we sell it as it goes lower? Well, again, I love the idea of that kind of pop and grind move down here. I love that one. Right? Get that one going. I also think too, and this would be for right here too, if they would have held that pullback and gone, that would have been a breakout. So if we end up back at these lows here, if the sellers can hold that pullback and blast through, remember, they've got to jump. All right? None of this stuff, right? Where it barely moved. No, right? That is not enough. At that point, I will definitely be looking for that move going higher. Right? If that's all the bears get, if all the bears get is that pathetic little double bottom right there, oh, baby, you definitely 1, 2, right back up into that trading range because that tells you everything's holding. But if these bears, right, if they can pull back and they can jump off that moving average here, yeah, absolutely. Mark up that low, find that channel, look left, find those little swings, get above prior swings. Those are kind of my favorites, right? trap, failure, pullback combo. And again, I'm just simply drawing on this right now, right? You'll get a lot more examples of that. You'll learn the rules of that in that free trading class. Where do these bears want to get to, by the way, if they go lower? There's another level right below us here, 43.70, 43.65, right? That's a prior swing there. So that will be where the bears, and I'll tell you, if they keep talking about raising rates, if we get a 1-2 punch of an escalation in Russia-Ukraine situation, along with one of the Fed speakers saying, no, we're going to raise rates tomorrow, you could almost, well, nothing's guaranteed, obviously, but that would not surprise me if this thing just pulls a complete reversal here, pops down, grinds lower, right? Get that short and just keeps on going. We find those new channels and we're selling right there. That would be some pretty easy trading right there for us. And so I would really hope we can get something like that. Or we'll sell the pop off the high and wait for the breakout. So there, as you can see, there's no shortage of trades here setting up for the S&P. Let's grab the Nasdaq. The Nasdaq is a very familiar chart. Nasdaq is very similar. You can definitely tell the Nasdaq was a lot more difficult to trade today than the S&P. And the big reason why was because, the S&P kind of gave us a heads up about that trading range ahead of time. It kind of fell into line there pretty quickly this morning. The Nasdaq didn't. Look at the Nasdaq here. There was no range over there, so it was a lot more difficult to find good setups in the Nasdaq here today, which is why I always tell people, even though the Nasdaq is more volatile, I still do stand by my comments earlier this year that the S&P is just an easier market for consistency. Don't get me wrong, you want a good rip your face off move. The Nasdaq's your bag, baby. But if you're looking for consistency day in and day out, you really can't beat the S&P. But nonetheless, though, right? NASDAQ is a fantastic market when it's behaving. We had some pretty wild swings there. What's the most important factor right on the NASDAQ? It's a range. It's a range. It wasn't obvious. The range wasn't obvious until we pretty much got right here. Once we got till about 11 o'clock this morning, we saw the market go down, go up, go down, and it didn't keep going, right? When it doesn't keep going like that, you're like, oh, shoot, okay, so apparently it's a range, right? Because anytime you see a market go up and then back down, then back up, it's like, okay, there obviously isn't anybody at the wheel right now. We're basically driving with our feet, and it's pretty much the range here. So what do we have going on right in the NASDAQ? Same thing as the S&P. Not as obvious. It's not as obvious, but it's the same thing basically, right? We're rotating back and forth here. The market now is rising higher, and they're ultimately, just like the E-mini, they're trying to get back up to these highs, right? They're trying to get up to a pendulum swing. They're trying to get up around these areas of resistance overhead, big triangle tops overhead here. They're trying to get back to these highs here. And so just like we talked about on the S&P, there's money to make up here, right? Like we saw back here, we go up. What happens? Buyers once, buyers twice, drop it. Oh, don't take a break yet. Mark up that low, mark up that high, and short it again. This is exactly what we're hoping for over here, right? So as we go higher here, I'm not going to force that top, right? I'm not in the business of predicting that reversal. But if I can see buyers here trying a couple times, trying once, trying twice, and then obviously nice strong, red candle, right? I mean, come on, hit that, right? Hit that sell button and get that thing going to the downside. As we go lower here again, right? We get those little channels coming in. We can grab that trap. This is nothing new here. We talked about this before on the S&P. On the S&P, we also talked about how if we get up into these highs, if we can see buyers here, right, hold that pullback and go. What will that be called? A 1, 2, 3 breakout, right? I call it a 1, 2, 3 breakout because 1, 2, 3, and again they have to jump off that moving average. Now, what you really got to be careful with on this NASDAQ is we're going to want to make sure it really clears above that expanding triangle. It's one really kind of important part here on this breakout. If we're lucky, we'll get that breakout strong enough to get us that channel now up above, right, that triangle, and we can actually use that triangle as an area of support rather than resistance. As you can imagine, something like this may not be enough, right? 1, 2, 3 up, into that, right? Into that triangle top. And then now we've got this 1, 2, you know what I mean? I gotta be very careful buying that pullback here. Wait for those buyers to try twice and dump it right back down into that trading range. But again, we talked about this, right? This 1, 2, 3 breakout. I think another very likely breakout would be a breakout into a, well, we talked about this one earlier, right? That kind of pop and grind. Okay, that's a breakout pattern you could definitely look for. Mark up that high. Right, mark up that low. And now the grinds are interesting because when you see a pop and grind, usually a pop and grind is a very obvious psychological clue. That usually means it's basically some sort of melt up market when it pops and grinds like that. So when it pops and grinds like this, I have a whole lot more confidence now buying that first test off the low of that channel, just because the nature of that pop and grind, right? It's kind of the way the markets work. When it grinds like that, usually that means the other side of the market is getting out, or institutions are just basically buying whatever shallow pullback they see and just keeping this thing going, right? Algos basically take over and make it go higher. So any pullback right there, again, maybe it's a trap, a failure pattern, a pullback combo, anything right off the low of that channel would be a good one. And then where would the target be on this? Again, first leg, third leg will give you an idea of where. And again, there's a lot of open. Yeah, look at that. Look at it, right? Now, 15,000 is a very reasonable objective here for the NASDAQ. In fact, I mean, look at this. You got to keep going higher, even higher than that. I want to say it's 15,250 or something like that is the next kind of major swing that we have overhead on the NASDAQ. There's a hell of a big space overhead here as we go higher here. Just be careful, though, with these breakouts going higher. We really want to see some strength on this. I've got 2 more breakouts, though. I've got 2 more breakout patterns. I'm going to cover those on the oil, all right? Because oil definitely fits well for 2 more of these breakouts. And again, everything I'm talking about right now in the NASDAQ can pretty much be applied to the S&P as well. For example, if the market simply, kind of turns over here, right, and grinds down as we go, mark that low, mark that high, find that swing, grab that trap, that failure, and that pullback combo. We know they want to get back to that low. Do they get down to that low, right? They get down to that low now. Now again, just like here, right? Let those bears try it once. Let them try twice, right? It's a very strong bear market now. Find those stops. Think about what the pain is and just simply buy right into those stop losses. Then mark up that new channel high. Find that low. Trade the turn. Right? Trade the turn. Buy that failure and then grab your trap. Grab your failure. Grab your pullback combination. Right? Trade that turn. Wait for it to drop. Okay? Don't pick a bottom. Wait for the 1. Wait for the 2. Let it pop. Right? Draw that new channel. Trade the turn, right, as we go. You can see a good example there of that from earlier on here today. And again, if they do take out that low, and if they can hold that pullback and blast, again, didn't do it here. I don't know if they're going to do it here, but if they do, that's where that 1, 2, 3 breakout comes in handy, and then we've got that new channel, and that's the trade you don't want to miss right there. Right? If there's one trade here you do not want to miss, they're all pretty good trades so far. I've mentioned here on this video. But if there's one trade you can really count on, and that is that take out that low, hold that pullback, and that strong blast down. This first pullback is, nothing's ever guaranteed in this life, but that first pullback is almost a guaranteed winner, right? As long as you look for the right entry setup, you'll learn the entry setups in that free trading course. Where do the bears want to get to? Yeah, they want to get down to that 14,000. 14,000 is a pretty easy number right below us there, and then from there down to 13. What's that? 853 as we go here. I got a few more breakouts I want to talk about though, right? A few more breakouts here I want to talk about here. Let's keep going here, right? How about some oil? Let's finish this baby up here tonight on the crude oil. And by the way, I want to say, if you are still watching this video right now, almost 30 minutes into this video right now, if you are that committed to your trading, then you got to find a way to come out and join us in the trade room. You got to find a way to get the resources together to come join us as a student and trade with us. Because I'll tell you right now, most people drop off this video about 10 minutes in. They can't hang, right? They can't hang. They can't hack it. So if you're still watching right now, if you're that committed, boy, you got to find a way to get into our trade room, because you're going to do so well with us. If you're that committed and that dedicated to keep on watching this stuff right now, I am really excited to work with you as a student in our trade room. What's the key right now on the oil? Well, really, it's this whole issue right now with Russia and Ukraine. This morning, we heard this brilliant idea that out of the EU that they were going to boycott Russian oil. And even though Russian oil, as we all probably know by now, everyone's an expert on geopolitical stuff on Twitter these days, right? I'm kidding with you, obviously. But as you probably know by now, Russian oil is not a very big chunk of the world's oil production, right? It's not a very big piece of it. But when you talk about banning or boycotting or restricting a whole big chunk of the world from buying Russian oil, there creates a bit of this panic, and that's exactly what's going on right now. You can definitely tell this market is being affected by the uncertainty happening in and around the whole Russia and Ukraine situation. I think a very important thing going on right now, though, and we've talked about this quite a bit on these videos, is that oil just seems to be being very, very disciplined between 105, 110. 115 is the next big milestone up top there, right? 115, and then if they can't hold it, right, back to 100. Don't worry about the 101, 102. It's every 5 right now, right? Oil has made it a very good habit of going $5 moves here, right? Week by week. So again, we're kind of poking up above the 110 right now. If things continue the way they're going right now, we're kind of in a waiting pattern right now. If things do keep escalating here, you would think though that 115, at least that 113.41 level, which is a major top back there, you would think that 113.50, let's say, would be an easy spot. But that 115.14 is, I would imagine, where the buyers really want to get to here right now. The bears, of course, right? The bears, they want to go back down to that 105. What we almost don't want to see right now for tomorrow is a settling in around 110. And I'll talk about why that's kind of not the easiest thing here in a moment. So, we're definitely bullish. There's no question about that right now. We have a pair of ranges. Boy, we saw that breakout into a range today. We were all set up to buy that dip in the trade this morning, right? All set up to buy that dip this morning. Didn't get it. We didn't end up getting a pullback here until almost lunch, really. On that deep pullback off the high of the channel. It wasn't easy to find entries today. Just kind of the stubbornness of this market. So, anyways, I'm getting off track here. Buyers have control. We're, as you can see here right now, we're definitely bullish. Buyers can definitely buy on the pullback, off the kind of top of that range. Buyers can definitely buy off of this range as well. These will be much different entry patterns, of course. I mentioned earlier, by the way, the number 2, right? Yeah, the number 2 is definitely going to be your favorite number on oil tomorrow, right? How about sellers? The sellers would love to sell a double top. Right, I'd be very careful right now, being just trying to pick a top right now. I would be very careful about that. I don't care what the news headlines say. When markets are behaving like this, you can be very careful. But I like the idea of the double top reversal. Right, the double top reversal can definitely be something we can get down on here for tomorrow. Right, so get those buyers coming in, get the buyers to buy up that dip, get that retest that high, and I like that short off that high. Right, we can play both sides of it, buy the dip and short the bounce off of that high here. And then obviously too, if we were to reverse and go lower, I think there's definitely a spot there for some shorts as we go lower here. So definitely plenty of ways to buy this right now. Okay, how do we pull back? How do we buy if it goes higher here? And what if it goes sideways up here? Because as you can see, it's been pretty much just pop into a range here. So let's talk about that. As we pull back right now, this range below us is unfortunately a big deal. It really is. We're very bullish, but what I'm looking for is I'm going to use that 2 try failure. right? I'm going to use that 2-try failure again, mostly because of this trading range. Another reason because it just simply isn't a very deep pullback. It just isn't, right? Market made a huge move up today, right? $8, almost $9 today. And so a relatively shallow pullback, you got to be a little careful, right? I'd much rather get a deeper pullback. That'd be much better. But I'm looking for the bears to try once, try twice. And then remember, if we can get those 2-try failures, they love to pop up and give you a trap just before you retest that high. Right? So think about this trade here right now. We pull back. I like the area right here, right? I like this whole area, trend line off the top of that range. I like this whole area here for sure. Let the bears try a couple times. I'll be buying into their stops. And then as we go higher here, again, it's a relatively shallow pullback here right now. Right, this pullback overall. So that little trap area will be a perfect one, right, to get in on the way back up to retest the high. Now, if we make a bigger move going down here, right, if we make a bigger move going down, there are 2 types of entries that you want to think about. One of them will be the one we described, right? So as we pull back, it's a very deep pullback now, right? So again, we go 1, 2, buy into those stop loss. And again, right, as we go higher here, I like to find those traps, right, before the retest of that high. So very similar, right? Number 2 is your favorite number, right? 1, 2 tries there. And remember, guys, there's a lot of variations of this 2-try failure. For example, I like to use these traps, right? A little trap below that prior swing. We see a lot of those. You see a lot of those. You see a lot of those deep pullbacks. Bears try a couple times, they'll trap below that low. And then again, right, don't be afraid to grab a new trend line, find that channel, grab that first test. I like traps or failure setups around the moving average. And again, the idea is to get back up, right, and retest that high here. Now, how do we sell this thing, right, off the high here? A couple ways you can do it, right? Obviously, again, if we can get that pullback to then retest that high here, this is where some of the easiest money is going to be, right? Buyers try once, buyers try twice. I do want to wait for that proof because, again, we're so bullish right now. I want to make sure these buyers really try a couple times, and then we can hit them with that short going back lower. We can find that new channel. And then again, what was it again? Trade the turn, right? Trade the turn as we go over. It's a 2-try failure into that first test. Could be a trap, a failure. Again, you'll learn that stuff, right, in that free video course. Where would the objective be on that trade, right? Where's the target going to be from that trade here? I would say pretty easily back down into that trading range. But remember, you can measure the amount above the range, amount below the range, and that will really kind of fine-tune where that final target's going to be as we go back to the side of that trading range. All right, what if the market was to pop down and begin to grind like this? Absolutely. This is definitely a situation where, again, draw that trend line, find that channel, and that trap would be a great one. Now, this could easily now double bottom, take out the low again, right? You make your money with that short off the top, and then sure enough, you know what happens next, right? They come in 1, 2, and we're buying, bam, right back up again. Okay, I mean that would be perfect, right? That'd be a great way to trade this as we go. Or again, we may see that strong run down, get those bears to come in, hold that pullback, and jump, right? If at any point here right now we get that strong move down, hold that pullback, and really jump off that moving average, we're now reversal mode, right? And remember, there's a good chance that 105 is where they're trying to go to, right? Go from 110 down to those 105s, mark up that low, mark up that high. If we can grab it, grab that trap. If not, just get above the moving average, get those buyers come in to buy that pullback. Once those buyers try and fail, we can sell into those stops, right? One of the easiest trades you'll ever take is a buyer failure when the buyers are thinking this is a bull market after it's got that 1, 2, 3 reversal pattern. All right. And again, 105 is a pretty easy objective here as we go. All right, I got a few more breakout patterns I promised you guys, and let's talk about those right now. Right now, one of them is a spike in range, and we've got to be ready for this on the oil, just because obviously that's been kind of the mantra over the past few days here on the oil, right? So whenever we see a bull market into a trading range, there are three basic ways to trade it. You ready? One, buy under the range. First things first, find levels of support below the range, like prior swings, like trend lines, right? How do you not love that trend line right now, right? What you want to do is you want to get that pullback. Okay, remember, ranges act like magnets. Okay, ranges act like magnets. So if we can get that pullback now, what we're going to do is trap in those bears. And remember, what happens is these pullbacks always seem very convincing. Well, almost always. You know what I mean? There's always some reason. Oh, this time is different. So your job tomorrow is if we see a range, right? If we see a range and we see that break out, do not let it fool you. Wait for that failure and buy it right back up again, right? Don't let it fool you into selling that breakout pullback. All right. You are no longer a rookie trader. If you're watching this video every evening, if you've taken the free trading course, if you joined as a member of mine, you are so far ahead of 85% of the traders in the market. So definitely kudos to you for that. We do not need to be trading breakouts here. Now, with that said, don't forget now, the amount we go below this range is now the amount we want to go above the range. Okay. Keep that in mind here. Now, as we go higher, we pop back up, grab that new channel. Here comes your second way to trade this, right? Second way now. Okay, second way now is trade the turn. So again, it's a failure pattern off support below the range. It's a new, again, trap, pullback, failure setup off that new channel. Where my target's at? Other side of the range at the pendulum swing. Okay, what's the third way to trade this? The third way to trade is going to be either a short 1, 2 back into that range. Why 2? Because of momentum. It's bullish, right? Let them try twice when you go in against momentum, right? That's one way to do it in that third way. Or we get a breakout, right? We hold that pullback and we blast, right? We blast through the pendulum swing. And what do? We mark up that new channel. You got it. You probably don't need me to repeat myself again on that one. We buy that first test, right? That is the 1, 2, 3 breakout pattern, right? So we're kind of putting a lot of these pieces together that we've already talked about quite a bit in this video, right? Is that cool stuff or what? Failure off that low, pullback combination, trade the turn, right? And then as we go up around those highs now, do we collapse back down into the range? Or do we hold the breakout, 1, 2, 3 breakout pattern, right, et cetera, going higher there, right? And again, we got a pretty good idea of where this market wants to go. 113.41 is the easy one. If it really gets on its horse, 115. Okay, so what if it does really get on its horse? Okay, an easy one. Pop up and grind, right? Pop up and grind, pop and grind. Mark that high, mark that big low. Okay, guys, do not waste your time with these big channels like this when you see a pop and grind. Okay, this is one of the most obvious clues. Whenever it pops and grinds like that, you know it's like a magnet drawing that price higher. Find that big channel, right? Find that big channel, drill it down. This is a 1500 tick chart, right? We are not trading off a 1500 tick chart. We'll drill down to a faster time frame. You'll learn that stuff inside that free course. We want to get that trap. I want that first pullback, right? That first test. It's a trap. It's a failure of bull moving average to pullback combination, right? And we go here, right? Take some profit off at that high. Leave that runner, right? Leave that runner. First leg, third leg is the runner, okay? Or what if we get a nice big pop up? Right? Big pop up, strong move, shallow pullback, higher high in price. Here's another one that really fits well. Now, this could also apply to the S&P. This could apply to the Nasdaq. It seems more likely on oil, which is why I saved it for last year, just because of the situation we're in, right? We're in pardon the pun, we're in a very explosive situation right now with the whole situation. right? We have supply chain issues. We have a war breaking out, right? And we have what might be a continued calls for boycott, right? We'll see if people dislike Russian oil more than they more than they dislike, paying. I think I paid $6.50 per gallon this weekend to fill the gas tank. Just insane prices here on the west coast of the U.S. I'm sure it is pretty crazy where you are too. Anyways, that's going to be your two-try breakout or your two-try trap, right? Strong move up. Shallow pullback, higher high, right? Now remember, do not fall for this one, right? Strong move up, shallow pullback, lower low. That is not the case, right? When that happens, that's a 1-2 and back down again, right? Okay? A lot of people ask me that. So what is the difference, right? What's the difference between a pop up, a 1, a 2, and back down? It's very simple, right? Strong move up, shallow pullback, higher high. I don't think you can get any simpler than that, right? The strong move up gets the party going. The shallow pullback drives the buyers crazy, and the higher high confirms the move. It basically confirms the fact that it's not just a V-top, which, by the way, does happen, especially in these volatile markets like this, right? Then that trap is your money trade. And obviously, right, if we can find a channel off those highs, off that low, even better. It's not required, but even better, right? So we definitely will add any more confluence that we can use here. All right, keep an eye out for a range, though, right? Keep an eye out for a range because that's what we've seen a lot of recently here on oil. And again, tomorrow, there's no major news tomorrow. So it's going to be a lot of just simply kind of hurrying up, waiting to see, do we hear more about inflation? Don't be surprised if we come in here and we have a surprise rate cut, something like that could happen this week. All right, guys. Now, don't forget, the markets are always different every day. The strategy is pretty easy, right? The strategy is pretty easy. Ranges, channels, trends, sideways movements. What's not so easy, though, is going out and doing it the right way, taking the right trades, avoiding the losses. That's not the easy part, right? The easy part is learning this stuff. The hard part is going out and actually applying it correctly without forcing bad trades, without making mental mistakes. And like I mentioned earlier, if you're still watching this video right now, you've got to get out there and join us as a student in the morning trading room, because I'll tell you, if you're this committed to your trading right now without being a student, I can only imagine how well you're going to do with us here in our trade room. So again, if you have any questions, don't forget, drop those questions below for me. I'm going to put all the membership links, how to access the trade room. I'll put the free trading course links right below us in the video here tonight. Don't be afraid to call the office. I'm always here. All right, I'm always here to help out. Don't be afraid to call the office. We got live chat over on the right-hand side as well. So keep in touch. Don't be a stranger. If you guys need any help with brokers or data or whatever it takes to make you successful in a shorter period of time, we're always here to help. And we'll wrap things up here for now. Very excited for tomorrow. Hopefully I'll see you guys tomorrow morning as a student in the trade room. If not, you better come out and see us tomorrow night. We'll do it all again tomorrow night on the next edition of our nightly newsletter. Guys and gals, thanks for joining me here tonight. My name is Joseph, by the way. Be nice out there, right? Be nice to each other. Be well. And I'll see you guys next time. Adios, amigos. Bye-bye for now.